And hey, everyone. Hope you're having a great day out there. So today we're going to talk about the market. Yep. Today we're going to talk about the market. Today we're going to talk about SoFi. Yep. The markets overall are actually sort of, in a messed up situation. So why not? Let's talk about fundamentals, right? Let's talk about companies that will ride it through or might not even ride through the whole way in terms of stock price and might affect volatility. So let's talk about that, right? Let's talk about whether or not we should be mindful of certain companies. Let's talk about it. But before that, show brother some love, guys. You know the drill. Smash that like button, smash that heart button if you if you like this video. Share it, right? Share it so that we can all spread the algos and we can all reach more people. Now we have already reached 8,000 people in the group. That's awesome. Yep. So we just want to spread the algos, and hopefully people can actually see the thought process. I noticed there's a lot of SoFi bulls out there that want to actually that maybe you guys know about this company, maybe you don't, I'm not sure, but if you can, just show a brother some love and smash that like. Yeah. Now let me share my screen here, and the first thing I want to do is, guys, I want to share the public account. Yep, as the normal drill. Now this market is starting to annoy me, right? And this was already sort of we planned this out, right? Part of the 2022 strategy, we planned it out already. And in fact, they may be that now there's no new, it's nothing new that the market is actually expected to go further down, especially for growth stocks, right? So we talked about it. So a little recap, if you guys haven't, you can check out the video into detail, but a little recap is that there's more room for value stocks, in my opinion. When we looked at the overall Russell Value Index, growth stocks are going to get hit simply because of interest rates. Now, some people predict that there'll be 8 interest rates hike. Some people predict that it'll be 4 times, right? 8 times, 4 times, 3 times. I don't care what it is, but I highly doubt that they will raise interest rates higher than 2019 levels. Okay, 2019 levels. So 2019 levels is where interest rates are around 3%. What we should be mindful of, though, is what we call the yield curve inversion. Yep. The yield curve inversion means that when the short-term 10-year yields are higher than the long-term yields, that's what it is. So if the short-term yields are higher, which they have no choice to actually raise up because of inflation, then I'm gonna get it, because normally a yield curve inversion is like an indicator. Well, obviously not. It's historically proven, right? Historically, yield curve inversion has always been, an indicator of a recession, whether a few months later, 1 year later, whatever it is. I think it's like a few months later. So that's an indication to actually take note of, because that's historically it has been like that, right? So I mean, when we look at the jobless claims, yeah, when we look at unemployment, when we look at the economy in terms of sector rotation, in terms of the whole economy getting better, we can actually see that and I think we addressed this before in sector rotation on one of the sessions, is that we can actually see that the whole market is going into recovery and economy is actually getting to the tippity top. So if, let's say, the economy is getting tippity top, then obviously there's more room to go down, because when that's where everything is all better, right? Jobless claims are at lows. Inflation comes in. They have to raise interest rates. When they raise interest rates, the yield curve inverts, and that's where, right, everything starts to go down. Because if inflation is not really sustainable, then the wages cannot follow through. It will affect demand. So when it affects demand, slowly products get sold lesser and lesser. I mean, that's a whole chain effect, whole ripple effect into play, and that's where a recession normally comes in. But I'm not here to be predicting whether or not there's a recession. I'm here to actually just give a macro view and tell myself that, okay, growth stocks will be taking a further hit this year, as we mentioned before. But I focus on fundamentals and I focus on my game plan. And my game plan is telling me, okay, SoFi is currently at a very interesting level. SoFi is actually fundamentally way better as per the post that I did, right? So recently I had two things that I want to share. I did a post on Facebook that I said, okay, you know what, regardless of any, see, the key thing here is that regardless of any any stock price movement, that's the key thing that I want to highlight. Regardless of that, we SoFi is in a better position than they are today compared to when they IPO'd. So when they IPO'd at $10, right? The question is whether or not the IPO was even, you know, did they even deserve that valuation, right? And at these times right now, when people are looking at deals, people will be looking for, okay, you know what, PS ratio of fives, right? PS ratio of sevens, PS ratio of tens, or whatnot. So that's the argument. But my argument is that, okay, is SoFi in a better position today? And we're going to talk about bank charter benefits, right? Are they in a better position today compared to, you know, when they IPO'd a year ago? So think about it. We want to be investing in companies that have solid fundamentals, not just looking at stock price, right? I can actually have the flexibility of, you know, making as a short-term trade like LC. Yeah, so this is what we can do. Like, this is the benefit of having a shorter term portfolio, and like, what is the diverse strategy that we're going to use. But when we want to, and I'm talking to you long-term hodlers, right? If you guys want to be holding SoFi or any other long-term company just because it's a quality company, for example, Tesla or whatnot, then that's a, you know, we can do that because we are holding a solid business. Now, everything, if you notice, everything within this year is all about sentiment, right? Obviously, fundamentals are affected, right? Because if interest rates go up, they are paying, you know, higher asset prices, they're paying higher material prices, commodities are actually driving inflation. So yeah, their profits will hurt. Now, obviously, will they charge it back to the consumer, which is often the case, or, you know, because commodities drive a huge role, right? Easily 30, 40, easily 40 to 50%. So it depends on certain companies of the material prices, the cost of revenue. But my point is, if we want to be investing, we should be knowing what are the cycles right now and what are the companies that will benefit during inflationary periods, right? Yeah, so that's what I want to share with you guys. And also, I want, you know what, in fact, before I move on, there's so many things I want to share, right? Let's go one by one. So the first thing is the update on the portfolio. Now, I added more of SoFi, right? Why? Because SoFi, fundamentally, they're way better. Having a bank charter is a huge game changer. In fact, SoFi is the, you know, one of the stocks that's depending on a bank charter is like a make or break, right? Let's put it that way. It's a make or break. So do you guys own SoFi? Do you guys don't? Well, let me know in the chats. Oh, by the way, guys, you know the drill. If you're watching this live right now, click hashtag live, right? Hashtag live, so that I know you guys are here. If you're watching on replay, click hashtag replay. Again, show our brother some love, and we can hopefully, you know, we can communicate with each other, and that's the purpose of this live, right? So looking back in the SoFi, having a bank charter is awesome. Why? Well, first of all, I extracted this from the recent 10Q, and this is where before they had it, right? This is actually Q3. So national bank charter, a key element of our long-term strategy is to secure a national bank charter. A national bank charter is as good as it gets. This is the best, one of the best, you know, bank charters there that you can have. You can previously people cannot trade, you know, crypto or do certain transactions in 40 states. Now they can do it in more, you know, I think 50 states, right? So which we believe can enhance our overall profitability, right? So how are they enhancing the overall profitability? They can practically use, and I think we talked about this before, one of the lives. They can practically use SoFi deposits, people's deposits, and fund their loans. Yeah. So while we currently rely on third-party bank holding companies, what they call sweep partners, right? Big banks, JP Morgan, you know, whatever it is, Goldman Sachs, Bank of America, they're actually partnering with them to basically using their license to be holding people's money, to be giving off loans, because they don't have a bank charter yet, right? So to provide banking services to our members, securing a national bank charter would, among other things, allow us to provide members and prospective members broader and more competitive options across their financial services needs, right? Including deposit accounts. So deposit accounts, they can basically hold a bigger quantum. They can hold larger sums of money that with a bank charter. Yep. They can actually hold longer, right? They can hold fund loans longer in their balance sheet. That's benefit of a bank charter. They can give more competitive rates for loans. So why is that? Because see, lower our cost to fund loans. So why do they have costs? Because they depend on big partners, right? They depend on big banks. So with the bank charter, they do not really have to depend on them anymore. And they can use, by utilizing SoFi Money members' deposits to fund our loans, right? So practically, they are lowering their costs way down because they're a bank. Yep, which will enable us to offer lower interest rates on loans to members, as well as offer higher interest rates on SoFi Money accounts. So they are telling people that, okay, you can come to us right now. We are a bank with a bank charter. You put in money, we can give you the interest rate and be competitive with JP Morgan, Bank of America, Goldman Sachs, whatever the heck bank that you wanna, you like a legacy bank, we can do that. Now, that is where the profit margins come in for banks. Yep. If you can be competitive at that level, the benefit is, it doesn't stop there. We are a neobank. We are a digital bank, right? So digital banking, neobanking, we offer, better loans, better interest rates, right? We can compete with big banks on that. So why us? Because we are more convenient. We have a selective, financial services productivity loop. The whole ecosystem that we talked about. We have, we can upsell and cross-sell with each other because we got Galileo, right? We have credit card where we can trade crypto. So here's the thing: there's no legacy bank right now that allows you to trade crypto, that allows you to trade, stocks is obviously yes, but to have a credit card on cashback, to allow you to get a sort of check your credit score with us and get $50 or $20. I forgot the amount, right? And if you refer to your friend, you get $300. So that $300, use it to invest. You see what I'm getting at? So the mission that they have is really strong. The mission is what is driving them, because they want to be obviously a bank. They want you to get better with your money, right? So with that, the question is, during these times right now, where in case you guys didn't know, Bank of America recently got 30% earning profits, right? Growth, or 30% growth, earnings growth. That's because of they're taking advantage of the situation right now, right? During high inflationary periods, during high interest rate, right, periods, financials will do well, right? Legacy banks, not fintech, right? But it begs the question, with this bank charter, they will be within that level of, is getting more and more profits, right? Simply because of high interest rates. So high interest rates are obviously, they want to be competitive, but lowering down their cost of loans, lowering down their cost to fund the loans, they do not have to be, they can well offer better rates right now, especially during a high interest rate environment. What I'm trying to say is they can benefit, right, in this environment right now, similar to what a legacy bank is actually benefiting. Now, it's arguable because the number of loans and the number of people actually getting their loans is not as vast, it's not as diverse, right? Legacy banks, you got underwriting, you got, mortgage loans, you got, personal loans and whatnot, exactly what SoFi is doing, but they have more products. Right now, SoFi is just lower down in the S curve, so they need time to actually prove themselves, right? They need time to prove themselves. They need time for adoption. That's why they have to spend more on marketing. But with the bank charter, like, they solve the issue of, let's not go with SoFi because they're not JP Morgan, right? Is it reputable? Can we trust this bank? Now they can say, oh, you know what, guys, come in with SoFi money. We got a bank charter, right? Because we are licensed, we are, backed up. We are, it's FINRA. They were previously, FINRA, FIDIC, insured. But my point is, they're more reputable. It solves the barrier of, okay, you know what? I don't want to be with a bank. I'd rather be with a legacy bank where they are, they've been around the block for like decades. They can actually solve that problem, but it takes time, right? So it takes time. So that what I'm trying to say is that, the market can F us up any time that they want. The market can F us up anytime they want. And in fact, they're effing us up right now for us growth, investors. They're effing us up right now. But all we need to do is to focus on fundamentals, not really so much the stock price, because stock price have been insane. And look at that sell-off, guys. The VIX have been 7% up, which they were practically like way down ever since open, and the markets are freaking out yet again. The markets are freaking out yet again. In fact, S&P from the highs, wow, it's at 6% down. So what is dragging them down? Big tech, right? What is dragging the Nasdaq down? Netflix. Netflix recently got, minus, I don't know, 12%. And by the way, earnings seasons is coming. So maybe people are. Okay, so trading, yeah. Surprise. Well, I didn't go into Netflix, but revenue did not really give a surprise. I'm assuming 59%. Okay. Well, I need to dig into Netflix, but I'm pretty sure that's why Netflix is actually dragging the whole Nasdaq down as well. So from the highs, Netflix is down 26%. Big tech, let's see, we got big tech here. Let's see one of the big tech, right? We got one. Okay, so Apple. Yeah, Apple is just down, 10%. Google, we got down 11% from the highs. Well, it's not too bad. It's not too bad. But what I'm trying to say is big boys, they're actually dragging the S&P down, they're dragging the Nasdaq down. So should we be mindful of these times right now and sell? Should we focus on fundamentals so that we are, more focused investing? And should we be investing and caring more about the market, right? Caring more about the fundamentals, caring more about the business, right? So yeah, these are things to consider. Okay, now moving on. So what did we want to discuss other than that? So I updated on the portfolio, right? So far we are cash right now is just at 1K, 1.1K. Now I deposited $500, right? As promised. I think we mentioned that before. So I want to raise my cash positions, and I wanted to get myself ready for SoFi and other companies. But my plan is to actually utilize that 1K on shorter term trades. And now it's earnings week, so I'm still holding Lending Club, right? Lending Club is actually reporting earnings in a week's time or 2 weeks time. So I still want to hold it because I personally think, right, companies that raise their guidance I think they will actually sort of break guidance. That means beat them, but it is what it is. It depends, right? So far is the biggest loser. Tesla is at 59. It used to be 100 plus yesterday, but I mean, yesterday my time and a few hours ago, but it is what it is. So far the NAV is not as below as our cost price, which is still good. We locked in profits, so that's that, right? So we talked about benefits of bank charter, right? Let me see what else. Higher interest rate on checking and no fees. High interest rate on checking accounts and no fees that they'll charge anymore, because with the bank charter, they'll offer more loans at better interest rates. No longer need to borrow money from big banks, sweep partners, right? And the funding costs from 2 to 3% to 1%. They're basically lowering down their cost of funding by 50%, right? That's how crazy it is. And other benefits of bank charter will be SoFi will pass on the savings to members via lower loan interest rates and higher savings checking account rates. SoFi will also keep some of the savings as extra profit, and SoFi can become the swap partner for Galileo accounts, right? So swap partner, what does that mean? So Galileo, they partner with companies that want to have fintech services, for example, transfer money. Galileo clients actually Robinhood, right? Big companies like that. What this means is that since SoFi is a bank right now, which again is a huge game changer, they can actually go directly to these companies and say, hey, we got all these products, we got SoFi Money, we got loans, right? We can upsell and cross sell all of our services to you, right? So Robinhood clients, which is probably a few million members, they can go to them and say, hey, we can upsell. We are a bank right now, so use our services, right? People don't get how big of a situation this is. Like with so many things that they can offer, and with the ecosystem in place, with all these branches out on potential, marketing, and the bank charter doesn't just give credibility. They actually can tell people that, hey, we are a bank right now. So instead of going with JP Morgan and Robinhood, you're all about young people, right? You're all about millennial money. You're all about Gen Y, Gen Z. You're all about convenient. You're all about lower fees, no fees, right? Come to us because we can offer all of that. And that's where the partnership comes in. So this ripple effect, this chain effect for all the other clients, they can actually do that, right? So SoFi can become the swap partner for all the Galileo accounts and say, hey, we are right now a bank, come use our services, right? Check with, again, track your credit score with us, we pay you money. Refer to a friend, we'll pay you money, good money, $300 just to refer a friend. That's crazy, right? It's insane. Like these are the things that I'm talking about, right? People don't know it. So what do you think I did? That's why I'm actually sharing with you guys why I bought. Why I'm sharing with you guys why I bought again, regardless of price swings. I bought again at $12, right? I mean, my personal accounts. I didn't buy in the public account because I wanted to have actually cash. And to be frank, I was too excited on my personal account, and then suddenly, oh my God, bank charter came out. Like I was sleeping, and suddenly all of our my own clients, my coaching clients, in the US platform on Discord, they're like, Warren, Coach Warren, we did it. Mao, we made it. Like SoFi bank charters up. Now I was like, oh my God, that's insane. First of all, I was so happy because all of the the members that we preach with, like we have been preaching, the bank charter with, is they're all excited, right? Let me just share a little snapshot of what we talked about, right? So we got a SoFi channel, Face Off Friday stocks. We got SoFi channel here, and it's insane, guys. It's insane. Like we were so happy. Like we were literally happy. And let's see, anyway, it's done for SoFi. Yeah, where was I actually sharing? Yeah, fantastic DD. Okay, sweet. So when people reported, it was insane. I just wanted to share this sort of a thing with you guys, and that's the benefit of having like a group in a community. Yeah, sweet. Then let's fucking go, Coach Warren. Right, it's about time. So that's why I put this message. Like I had to put a message, right? I had to put it because regardless of how the stock price moves, and I project that the price is going to be very, very rocky simply because of high interest rates and this whole environment right now. So regardless of how it moves, even if it goes down with the bank charter, which I don't know, I wanted to go down, right? Fundamentally, they're way in a better, now in a way better position, profit margin wise. Oh, by the way, the overall, when we do our projections, and I think I shared this before in a recent live, right now, SoFi can have profit margins of what they projected to be 20%, 20 to 25%. Now, 20 to 25% will definitely bring their, like, deserve a better valuation. If we want to use earnings multiple, we project a decent revenue growth increase by X amount of years. From that, we project the net profit margin, which with the bank charter now, they're going to be profitable targeted fiscal year 2022, guys. Fingers crossed. Okay. So that's one thing. Profit margin wise, which is the biggest factor for me. right? Because I'm a business investor. I want to look at projections. I want to look at fundamentals. I want to look at whether or not they deserve this valuation in X amount of years. So profit margin wise, up. Reputation wise, up. Credibility wise, up, right? New consumers, etc. I mean, because new consumers, they are looking for credibility. They are looking for safety, right? So they have that. So I talked about during the live sessions. So we got 1.5 months till the next quarter earnings. Hopefully we see them kill it to maintain flywheel effect status, right? So that's insane. So yeah, I just want to share this with you guys, and you guys can search it yourself, right? What did Noto talk about? The National Bank Charter. What is all the benefits? What's going to happen? Now they're dedicated to be pumping in 700 mil as what they've been saying on. Furthermore, uh, 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 well, they've been spending 700 mil altogether to acquire this bank charter. It's huge money, but in time, the benefit is that they will be self-reliant, right? They don't need to raise money anymore from the profits that they make, from the members that they have. So that's where flywheel status comes in, right? So yeah, I thought of sharing this with you guys, and I personally am very excited about SoFi. Please do your own due D when it comes to SoFi. But yeah, this is what I wanted to share. I mean, let's see. Yeah, we can actually go down. So next earnings will be on 25th February, which is actually a month from now. 4 more days to a month, right? It's insane. So, what are the revenue guide? Sorry, this is Roku. Oh my God. What am I doing? It's a March, 2nd March. So, what do you think the earnings will be, right? They're projecting 277 M. Can they reach that? Well, actually, they guided 245 M, but full fiscal year 2021, full year, they're actually guiding to be having, 1 B in revenues, right? So what do you think? Do you think they can achieve that? Let me know in the comment. Let me know in the chats, right? Let me DM me, drop a DM if you want to chat about it. Do you guys have SoFi? Let me know. But yeah, what do you guys think about, SoFi? What do you guys think about all the stocks that you guys are holding? I know some of you are actually bullish on Airbnb. We can talk about that in another time, 24 February. So earnings season is coming. And in fact, there's a lot of, if we look at earnings whispers, a lot of earnings whispers. There we go. So earnings whispers, we got Tesla coming in soon. Netflix already reported, which I haven't really seen, didn't update. Ally. Oh, so Ally being, SoFi's competitor. Well, obviously different space because Ally is on mortgage loans. We can actually sort of gauge whether or not Ally does well. And, that will give a good indicator, which is actually tonight. Okay. Well, tonight, my time. Logitech's coming out. Sorry if this is too small. Visa, Apple, like this is huge earnings season. And maybe that's why I thought that they will provide catalysts, like earnings catalysts because of earnings season. Tesla is coming out 26, by the way. But it is what it is. I thought it'll be providing a catalyst because before earnings season, right? All the stocks are on a rundown, right? All the stocks on a rundown. So depending on how earnings will be and fundamentals and profits will be, it will hopefully give a boost. But it is what it is, man. It is what it is. So all we got to do is just invest safely. Invest with fundamentals, with a right mental model, right? With thought process there. That's what we got to do, right, guys? So hopefully you guys got some value out of this today. Check out our YouTube, right? Smash that like, smash that subscribe if you haven't. Check out our YouTube where I'll be posting more and more videos about, I want to be posting more and more videos about thesis and more mental model, especially this time right now, mindset. What's our thought process? So do check it out, right, guys? And I'll see you in the next one. Thank you.